Hey guys, TommyBryson here, and I just finished reading this book today, Security Analyst by Benjamin Graham and David Dodd, and this right here is actually the 6th edition. And people call this book, Security Analyst, basically like the Bible of investing, because Benjamin Graham, if you guys don't know, is the guy that taught literally Warren Buffett everything he basically knows. People think that Warren Buffett was investing since he was like 7 years old. In reality, he was just trying out a bunch of different things with no practical advice or formula whatsoever. But when he ran into Benjamin Graham via this book right here, which is called The Intelligent Investor, was around 19 years old, that's when everything changed. And by the way, in my opinion, the 3 most important books when it comes to finance and investing are basically first, The Intelligent Investor, second, Common Stocks and Uncommon Profits by Philip Fisher, and then third, Security Analyst. Now, I'm reviewing this book, obviously. I'm going to tell you first how I read it, because this book is not a book you read, it's a book you study. In reality, it's more like a textbook. In reality, this book costs around $50-something, and I think it saves you somewhere around $90,000 plus, because in order for Warren Buffett to get the information that he got, he had to go straight to Columbia University to acquire from Ben Graham himself. But me and you don't have that luxury, so this is the book you can basically read in order not to have to go all the way to Columbia University to learn about investing and all so on, okay? Now, the first thing is, guys, this book is dense. It's over 700 pages. I recommend when you first start reading this book, you should have, for example, an entire other blank notebook next to you with a pen and pencil, because you want to take a lot of notes. Now, I did around 2 hours a day on this book, and I got through somewhere around 20 pages a day. That's it, just 20 pages. Now, if you guys do some quick math here, but if the book is around 700 pages, right, in reality, and you're doing about 20 pages per day, that's around 35 days. Like in around a month, you should be done with the entire book. All right, it's not really that much to say, but it is gonna take you a while. Now, one of the most crazy thing about this book right here is that the first part completely, it sounds like, for me initially, I was like, I don't want to read this first part because it's all about fixed rate securities, meaning, for example, like bonds and whatever. And I don't want to invest into bonds, I want to invest into individual stocks, into securities, into equities, okay? And that is the second part of the book. But to get to how to invest into stocks, you gotta get into how to first invest into bonds, because usually bonds are gonna be the more secure investment, and that's what you want to look at first, because basically, if you can get money for no risk, then why wouldn't you actually want to do that? Now, there is always risk involved, okay? Don't get me wrong here, but bonds tend to be a lot safer than stocks. Well, not really, because if the bond isn't safe, most likely the stock isn't safe either. That's what you're going to learn in this book, okay? Now, I do want to make a connection, a little bridge here. When you read this book, if you ever read this book, the cool, sexy thing about this book is that basically it's somewhere like around 500 pages. It's very simple. Well, it's more simple to understand than this book. And when I first started reading it, I couldn't get past like 7 to 10 pages because it's basically so difficult to actually understand. It was that hard for me. But eventually, you get through it, you learn a lot more. But this book is sexy. You know why? Because there are a lot of formulas here. Now, one thing I didn't know was this. I don't know exactly what edition this actually is. I just know it's updated and it's been revised. But this book right here, the original edition to this book was basically then changed over and over and over again. The formulas that they used back then, they created new formulas. Ben Graham did, because he was basically always looking for something new to basically do, because, in capitalism, all right, the minute, for example, you let out the secret and everyone takes advantage of it, in reality, it kind of becomes irrelevant. So what these books are, it's not about the formulas. These formulas tend not to work anymore. What it is about is basically the knowledge. The knowledge you get about what is the market, how does it actually work, how should you basically gauge your emotions when you're basically looking at the market. And when you go into, for example, this book, which is basically the Bible of security analysts, okay, it's the same thing. You will not get in this book a lot of formulas. Like, at all. You probably won't get really any, okay? There aren't any formulas here because what this is meant to be is kind of like principles, guidelines to go ahead and invest based on. What you kind of end up getting out of this book is basically that when you're looking at a company, you're not looking at paper. You're looking at a real company. And you want to gauge your investment strategy not based on rule of thumbs, but based on common sense. You want to look at every single company differently. You want to make sure when you look at a company, you're looking at the earnings, but you're not being, for example, too like, hey, the earnings are high. No. What were the earnings for the past 7 to 10 years in this company? What is the average? What is the trend? Okay, how much money is it actually making? What is his operating margin? On top of that, what does his balance sheet look like? Because a lot of the strategies that, Ben Graham had back then, which is basically to buy companies for below their liquidation value, you can't really find those anymore in today's marketplace. But what you can find are companies selling below its intrinsic value. And that's what it kind of teaches you how to do. How to find those companies, how to understand intrinsic value, how to basically go ahead and say, well, this company has, for example, it has great earnings. It has good management that is all about, for example, shareholder interests. It has, for example, a good franchise. And by franchise, that basically means, hey, they have a product that gives it an edge. Kind of like, for example, how Coca-Cola has Coke. This is, for example, like a big, massive brand. You can have a dummy run the company and nothing's actually going to happen. But if you think you're going to read this book and you're going to get, for example, formulas, you're not going to get formulas. What you're going to get is basically just principles to live by when you're going over, for example, securities and looking over them and how to actually understand them, how to interpret, for example, the financial statements, how to make sure you're not fooled by different things that management do to make their income statements look a lot better, to make their balance sheets not look that bad, okay? That's the entire idea. Now, the minute I finished this book, what I went and did was basically I ordered the second edition. I think it's like the 1940 edition, if I'm mistaken. And here's why. Everyone talks about the second edition, and the reason is simple because the second edition basically has a lot more examples. And as you're basically reading and trying to understand a subject you're basically brand new to, you want to make sure you have a lot of examples to basically work with. So that way you can kind of do as you read and as you learn and basically take on action. But this book right here, I absolutely recommend it. In reality, the way I see it is that the way Ben Graham works is he's very conservative, but most of his money was made from Geico, and Geico is an investment that broke every diversification rule that he basically had, but he made a lot of money from Geico. And a lot of his rules are basically, hey, the most important thing in finance is margin of safety, because no matter what your plan is, you want to make sure that your plan doesn't have to go according to plan. So this way, if you have margin of safety, you have enough room in there that if you made a mistake in your calculations and your forecast, you don't have to worry that much and you get your money out, okay? And one big thing is you want to make sure that whatever investments you make, it's not an investment that has the potential of wiping you out. Yeah, this book talks about margins. It talks about the mistakes that he basically make initially on. It talks about so much that as you read, you're just going to be like, oh my gosh, there's so much I have to learn here. And one read, I honestly don't think it's enough. And that's why I'm going to go over the second edition and read even more. And as you read, I promise you one thing. If you read this book for the sake of reading it and you don't take notes and you don't practice, you don't look at companies, it's going to be like, for example, nothing. Before I read this book, I listened to the audiobook, and it was about 40 something hours. And I listened to the entire audiobook, and it was like an Indian song or like a Chinese song. It sounded great. It sounded cool. It had a rhythm. And if you asked me what was it about, I couldn't tell you anything because you don't learn anything that way. So the only way to understand this book is by reading it, studying it, analyzing it, taking notes, practicing it, and using, for example, real life examples to kind of gauge things off. And by the way, this book will lead you to this one. But one big flaw with Ben Graham was he had, for example, this big under belief in, for example, brands, okay? Everything that he wanted to buy it very cheaply. Almost kind of say like there's no way for me to lose, but it's okay to buy a reasonable company. Most of his analysis was based on, for example, a lot of like quantitative factors and not enough qualitative factors. And that's where Philip A. Fisher comes into play, okay? Because that's why I'm saying it's one of the best books ever. Because I think, if I'm not mistaken here, this book is about 12 or 15 qualities that you can basically look at and analyze when it comes to looking at companies. And it involves management. It involves the actual company. It involves the industry. It involves, of course, looking at the price and everything like that. And that's what it's all about, guys, okay? So I highly recommend you read this book. But understand, as you read this book, the only way to actually get the knowledge is to actually go ahead and practice. And to end this video, guys, I really want to share with you guys a quick story that I always use to like help myself out. And it's basically, I study Warren Buffett a lot. I have for years now. And the idea is, the more I study Warren Buffett, it kind of starts to show you like this blueprint when it comes to becoming a solid investor. He kind of says you shouldn't start investing until you're able to advise somebody else about investing. And that is very important. Because if you think about it, if you can't feel comfortable advising somebody else, then why would you take your own advice that's basically unqualified to make mistakes in the market? Okay, so you gotta reach this point, this level. If you wanna basically start buying things right away, just deal with very small quantities of money, so that way you don't make a mistake that can basically wipe you out. But whenever I look at like Warren Buffett, you see that he started basically learning about stocks at age 7, but at age 19, that's where he got this book. And then eventually he went to Columbia University. He took a class by Ben Graham, and he basically just took like this class, but like in real life, and was able to fully analyze companies and so on. And then eventually he was able to get Ben Graham and convince him to basically have him work for him. So when he came back to Omaha, I think it was at age 24 or age 26 or 7, he basically came back retired. Like he had enough money to basically retire and not have to worry about money anymore. Because as he worked for Graham, he was buying companies. He was actually practicing everything and putting everything into action. And once he got enough knowledge, he got the knowledge to become competent enough to basically go on to say, hey, you know what? I'm going to start a partnership. I'm going to take some of my family's money with some of my money and then invest it to make this partnership. And eventually, he closed a partnership, of course, and he bought Berkshire Hathaway, and now Warren Buffett is Warren Buffett. But it all started with, first, he gathered knowledge, he started to apply it, he grew in competence, and then Warren Buffett became Warren Buffett. But it was like this span of like almost like I'm saying like from 19 to 25 or 26. That's like 7 to 8 years basically almost. So just like that whole thing I told you about, acquiring the knowledge, learn under Ben Graham, and then going ahead and practicing everything, and then going ahead and running a management company, and then going ahead and basically making a bunch of mistakes. So this whole thing is, guys, one thing I'm saying is, you're not going to read this book and now you're Warren Buffett. It doesn't happen like that. You're probably going to read this book, and what you're going to have is a lot more questions. That's really what you're going to get, a lot more questions. And those questions are going to be answered as you start to look for companies, analyze companies, and put these things into actions. That's my advice for you. So I highly recommend you get this book, you read it. I wouldn't say I recommend you get the second edition first, because I didn't do that. But this edition, because it is a 6th edition and it was basically started like in 2006, a lot of the information here, it comes from a lot of Ben Graham students. So it's a lot more modern. Warren Buffett does not like it that much, honestly. But in my opinion, it's a lot more modern. It's a lot easier to digest for the average person. And then once you digest it, you kind of fully comprehend. You can move on to 2nd edition and then just get a lot more examples. Along with this book, which is not going to be enough, I do recommend you also study accounting, which accounting is super, super, super important. And I don't mean, for example, accounting in the general sense. Because by the way, I went to school for accounting, got a whole bachelor's degree in accounting. But this accounting to do like taxes or whatever is completely irrelevant. It's accounting to understand a company's health and standing. One thing is reporting and one thing is understanding. One thing is me telling you what something is, and one thing is me actually understanding what I'm telling you. They're two different things. So again, the whole thing with investing is not going to happen overnight. But if you can read these books and still feel like you want to be an investor, then you are in the right place. But if you start even with this book right here and you're like, this is not for me, then investing your money into an S&P 500 fund is also a great investment. It carries a lot less risk. The return is obviously a lot lower, but making 8 to 12% of your money is nothing to be ashamed about. But that's the whole thing. This does take a lot of work. And one big thing, there's just so much, okay, I want to share with you guys. But one big thing that I realize is this game is kind of like treasure hunting in a very boring style. What you're doing is you create your whole criteria as far as you're looking at, for example, in an investment, and then your job is, okay, your job is to look through hundreds of companies within what your circle of competence is that you actually understand, and then find the ones that fit your criteria, and then you finally are able to put money into these companies. But sometimes you might go a year, you might go months where you don't find those companies and the market just has everything being super overpriced. Like buying something usually over a P ratio of 20 is usually at that point like very speculative. And one big thing you're going to learn in this book is the difference between investing and speculation. And he doesn't say don't speculate, but he says don't speculate thinking you're making an investment, because they're two very different things. Again, there's no way I can cover this book at all in any sense of the word without taking up at least like 2-3 hours, okay? And even then, I don't think I can do it like any justice, okay? So that's basically it for this book review. Thanks for watching this video. And again, the 3 books are The Intelligent Investor, Common Stocks and Uncommon Profits, and also Security Analyst, okay? This book is gonna change your life, okay? Thanks for watching. As always, like, subscribe, hit the bell so you're notified. Comment down below any questions. Up here is another video. Over here is my face. Subscribe. And as always, Long Term Team officially out.